Hey everyone, welcome to another episode of AdMail. This is Adam Bergman, founder and CEO of IRA Financial. I'm here to help you find the answers to the most frequently asked questions from my clients about self-directed retirement accounts. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Everyone, and welcome to another episode of AdMail. I'm Adam Bergman. Today's episode is a great one for Victoria D. of Portland, Oregon, not Maine. And Victoria wants to know, can a self-directed IRA LLC purchase a vehicle and use the vehicle for business purposes? So Victoria, this is a question that doesn't come up often. Why? Because most people that do and employ a self-directed IRA LLC, they're doing it for passive purposes, whether it's holding notes, doing private placement, private equity, crypto investments, or doing real estate. And generally they're outsourcing any of those activities, heavy lifting activities, whether it's contractors, construction, repairs, improvements. They're outsourcing to a third party, so they're really not going to be buying their own vehicles, tractors, cars, trucks, SUVs, whatever. Doesn't happen. But could it happen? The answer is yes, Victoria. Number one, you can't drive the vehicle, right? So if you buy a tractor or an SUV and someone else is using it for whatever reason, I guess it's possible. The only problem, Victoria, is that by doing that, you're probably going to turn a passive investment into a business, because it's going to be hard to argue that your LLC, which let's say owns real estate, or maybe it invests in a business, or maybe it owns a motel, or maybe it owns a some type of income producing activity, and now it has a vehicle. It's going to be difficult to argue that's not a business. And why do you not want your IRA to be involved in a business? Well, something called UBIT, unrelated business income tax, which is a tax employed at a 37% rate in 2022 and 2021, follows the trust tax rates, which taxes your business income at a 37% clip once you hover around 20,000 or so of net income. Now, if that business activity does not generate any income less than $1,000, there's no UBIT tax. But hopefully your activity does well, right? Ultimately, it's going to generate cash flow, revenues, income. That could be subject to the trust tax rates, which currently is 37% in 2022. So don't want to be in a business in your IRA. You want to generate revenues, income. You'd rather do it passively, where you're generating rental income, interest, dividends, royalties, capital gains, because none of those income categories are subject to the unrelated business income tax rules. So, Victoria, yes, technically you could buy a vehicle for whatever you're doing. You can't drive it, you can't use it, you can't take it on the weekends, take it to the lake, take it ski hill, whatever you're doing. It can't be used for personal purposes. You can have a third party. Let's say you have Joe or Jane, your manager, who's running your activity. Technically, they can use it for business purposes. But again, I think you're turning a passive investment into an active investment. Now, if the LLC is already active because you're going to own a trailer park, you own a motel or a restaurant or whatever, you're already paying the UBIT tax. It's already a business activity. So owning the vehicle is not going to trigger any additional tax because you're already in that business category. Just make sure from a prohibited transaction standpoint that you're not driving the car, using it or whatever, just benefiting it from that vehicle personally, because that is not permitted. Okay, so it's a good question. It doesn't pop up very often because most people are using IRA LLCs for passive purposes. They're not involved. The activity doesn't generally involve vehicles. Even for IRAs that are investing in restaurants or business type establishments, generally it's passive. They're a minority interest holder, so they're not worrying about the vehicle or any of that. That's someone else's responsibility. Not to say an IRA can't own 100% of an active business. It can. You just can't be personally involved in it. And you can't earn a salary, clearly. And also you can't benefit from any of the IRA or the business assets, including any vehicle or any other activity or any other asset it owns. So be careful if you're going to be buying a vehicle for your IRA LLC. If you're not considering the activity of business. Now, using a vehicle, purchasing the vehicle, well, definitely not using it, but purchasing the vehicle could turn that passive investment into an active investment and then ultimately potentially trigger the UBIT tax on the net business income. If the activity is already a business, you may not care as much because you're already paying UBIT, and just obviously make sure that you're not driving the car or using it for any purpose. You or any disqualified person, parent, child, spouse, daughter-in-law, son-in-law, or any entities controlled by such persons. So you can't have your kids or your parents use the car. Otherwise, great question, Victoria, and thank you again. So ultimately, this was a really fun ad mail, and I appreciate all the questions from Twitter, from Carl, from Victoria. Really good episode. Again, if you have questions, send them into info@IRA Financial. You can hit us up on Twitter, Facebook, YouTube, LinkedIn, Instagram. You can just write ask Adam or AdMail or questions. I have lots in the queue. There's some good ones, but if anything pops up that's timely or anything that really piques the interest of me and my producer, we'll go with it early. You won't have to wait months to hear your question. You may even hear it next week. So send them in. Really appreciate the great feedback. If you're listening, thanks for listening to the podcast. If you're watching on YouTube, appreciate it. And come back for more. Talk to everyone again next week. Take care of yourself and be well.